Will investing in the Edelweiss Business Cycle Fund NFO help in your wealth accumulation process and get you the returns that you dream of? Let us find out through an in-depth analysis in this video. Hi, welcome to holisticinvestment.in. We help individual investors like you to make the right financial and investment decisions to reach your financial goals in a faster and smarter way. So, before analyzing whether this NFO can get you the returns you dream of, let us first understand some of the key features and the basic working of this NFO. So, as this is an NFO, it opens on 9th July 2024 and is open until 23rd July 2024 and belongs to the category of thematic equity scheme of business cycle. It is an open-ended fund type which has a benchmark of Nifty 500 TRI. The minimum amount you need to have to start investing in this NFO is 5,000 rupees. The fund managers for this Edelweiss Business Cycle Fund NFO are Mr. Bharat Lahoti and Mr. Bhavesh Jain. The exit load for this NFO is 1% if you redeem it within 90 days. Now let us first understand what is the investment philosophy and the objective of the Edelweiss Business Cycle Fund NFO. So this NFO aims to invest at different stages of the business cycle in the economy. So as an investor, it can provide you long-term capital appreciation by focusing on riding the business cycle through dynamic allocation between various sectors and stocks at the different stages of the business cycle in this economy. Now, let us first understand what are the pros you can get by investing in the Edelweiss Business Cycle Fund NFO. So, as you can see, this NFO predominantly invests in companies that undergoes different stages of business cycle in the economy. It also diversifies among the top performing companies that undergoes the different stages of business cycle in this economy between various sectors and stocks. Also, if you are an investor who is seeking for allocation to the different stages of business cycle in this economy between various other sectors and stocks, then you can choose to invest in this fund as this might be a suitable fund for you. So if the new trends and emerging sector performs and delivers, it will definitely boost the overall return in your investment portfolio. As this NFO applies the high risk and high return concept, if you stay committed to it for a long term period, like let's just say 7 to 10 years, it can potentially maximize the returns you might get because of the high risk and high return concept involved in it. So as it has high risk in it, it's suitable for an aggressive investor who are bullish on investing on the different stages of business cycle in the economy between various sectors and stocks. So if you are an investor like that, it might be a suitable fund for you to start investing in. So as we have understood the pros of investing in this fund, let us now understand the cons of investing in this fund, because it's equally important to understand the cons as well, because it will reveal the potential risk you might take in the investing in this fund. So as an NFO, it is riskier for a short-term investor. As we already previously discussed, this fund applies the high risk and high return concept. So you need to stay at least a long-term period of 7 years to 10 years to gain the returns you might potentially get. So if you're an investor who's a short-term investor who's investing just to achieve your short-term financial goals, then this fund might not be suitable for you because it will get riskier. Because in the short-term period, the market cycle will go through a period of no return, even low returns, to a period of negative returns. So it might turn out riskier for you. So please factor in these considerations before choosing to invest in this NFO. Also, this fund might not be suitable for your core investment portfolio. As this is an NFO and we do not have the sufficient track record needed to analyze whether this fund will get us the potential returns we need, this fund might not be suitable for adding to your core investment portfolio where you're investing just to achieve your main financial goals. So investing in this fund and finding out that not all new trends and emerging sectors translate into stock market returns will definitely overexpose your portfolio to negative triggers, as this fund is also not flexible and dynamic when compared to other diversified funds, because it's not investing according as same as other diversified funds, like they will be investing in top performing companies in small cap or in mid cap or large cap. Here they are investing only at top performing companies that undergoes the business cycle in the economy between various sectors and stocks. So what will happen is if you add this to your main portfolio, it will add more volatility to your investment portfolio. So as it has a concentration risk, if the new trend and emerging sector underperforms, it will definitely also impact the overall return in your investment portfolio. Because for investing in a Edelweiss business cycle fund NFO like this, where it belongs to the thematic category, you need to know the timing when to enter this fund, when to exit this fund, so you can gain the maximize potential returns in this NFO. And the circle of competence should be on your side, which is highly unpredictable in the market. This might not be a suitable fund for you, especially if you choose to add to your main investment portfolio. So, what is the final takeaway? Should we invest in the Edelweiss Business Cycle Fund NFO or not? Is it worth investing or not? As we can see from the analysis that this fund is not suitable for a first time investor or even a conservative investor who is not willing to take any kind of risk. So if you belong to any of these category of investor, then you should avoid investing in the Edelweiss Business Cycle Fund NFO. But if you still want to invest in a thematic fund that involves the business cycle, then you can see that there are already existing business cycle thematic funds with proper track record of at least 7 to 10 years. Why I'm stressing on the importance of a track record with 7 to 10 years is, in the 7 to 10 year period, you can see the stock market has completed the a market cycle where it has gone from low returns to high returns. So you will be able to properly analyze how it has performed when the market is low and how is that performed when the market is high. So you will be able to take a calculated risk instead of blind risk while investing in the Edelweiss Business Cycle Fund NFO. So it's better if you invest in an existing business cycle thematic fund with a track record of 7 to 10 years. Also, if you want to invest it through a core investment portfolio, as we have already seen the cons, it's not worth the risk, so it's not suitable for investing through a core investment portfolio. But you still want to invest in Edelweiss Business Cycle Fund NFO and you still want to take the risk, do invest it through your satellite portfolio. When if you have some spare money and you want to invest in the Edelweiss Business Cycle Fund NFO just for an experimental basis, just to see how it will perform, then you can invest it with that spare excess money through your satellite portfolio. Also, it's not suitable for someone if they don't know when to enter and exit from a business cycle fund, which is usually if some investor is an expert who has been tracking and analyzing the stock market for a long period of time, or they are involving the help of a professional like a certified financial planner, then they might be able to know when to enter and exit from a business cycle fund like this. But if they don't know and they are just beginning to invest and they do not have the sufficient knowledge to invest in the market, then Edelweiss Business Cycle Fund NFO might not be suitable for them to invest in. Also, if you want to invest, definitely consult with your certified financial planner to see if there is suitability between your investment objective and the investment objective of the fund you want to invest in. Also, see if the risk profile of yours and the risk profile of the fund matches, and see if there is any overlap ratio. A financial planner will be able to see what is the overlap ratio between your investment portfolio and the investment portfolio you want to invest in. So if the overlap ratio is more, they will suggest you not to invest in it as it will impact the overall return you might get. But if the overlap ratio is less, they might suggest you to invest in it. And also how much allocation you need to give to this fund to achieve your financial goals in the long run. So a financial planner will consider all these factors before suggesting you to invest in this fund or not. So definitely involving a professional financial planner in the investment journey will make the entire journey smooth and hassle free for you. If you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.